Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video.
Well, good day, everyone. Ira Epstein, and here we are. And yep, we are on Wednesday, and this is the 29th of June, 2011. Just had some shows with my friend Barry Rosen of Portuguese. You know, I always say these guys are my friends. I've known Barry a shorter while than I know a lot of these guys, but we quickly did become friends and share trading ideas and so on. And it's like a camaraderie you build up with people. Well, let's you and I talk for a moment, if we could, about today. Greece was the issue of the day. And at the end, France and Germany came to the rescue. They kicked the can down the road, and that's not necessarily a bad thing. I mean, the choice was, does Greece go in default now or not? The idea that without defaulting, that they could keep their same lifestyle, or with defaulting, they could keep their lifestyle, is out the window. Raw economics. You can't pay for what you can't pay for. It's that simple. And while the populace, we're seeing certain people in the street, the demonstrators, and I understand what they're feeling and they're going to be biting the bullet, they put themselves into this own problem. And that is often the hardest thing to do, is look in the mirror. The world didn't put them there. They put themselves. It's not a shame on you. It's just reality. Things have to change. The good news for the financial markets, and this is not about Greece, the good news is there was no meltdown. The good news is maybe they're going to be able to get themselves straightened out with help. And the good news is, if I'm France or Germany, why do I want to take a loss on this debt now? Let's help them, and let's do kick this thing down the road a little bit, but let's also make certain that they get back on track. Not a bad thing for you, me, or a country. It's that simple. I found it interesting today to see what we talked about yesterday. And I just want to bring you back on the market a little bit. This is the 24th. Now, you know we're at the 29th. Looking at the market go sideways, rallies up to the Bollinger Band, and this is the difference between gold and silver. Maybe I should explain that. Is this line's going up, like it did here, the brown line. What you're looking at is you need more silver to buy an ounce of gold. When the line is going down, you need less silver. So up here you needed 50 ounces of silver. And down here, when the market came to almost, $50 an ounce in silver, you needed only 32 ounces of silver. So the market takes off and goes up on Monday to 44 ounces you need of silver to buy an ounce of gold. I told you yesterday, this market, I don't know if it's going to break out or not, or is it likely to just pull back into this trading range, and that's exactly what happened today. It pulled back. I think you're going to wind this up a little bit more. But these type of charts are super important, especially as you watch a Bollinger Band start going narrow, and that's the black dashed lines. Why? Well, it's an algorithm that is designed to keep the market trading within it 95% of the time. Sooner or later, if you're going sideways and that band is narrowed in like it has, it's going to break out of the band. I happen to think that these bands, everything's going to start happening at the end of the summer. Let's call this August, when I think the metals, for whatever reason, some event, are going to begin some type of move back to the upside. Will it be dramatic? Who knows? But I do think that because gold, and here is a chart of gold, has not so far been able to break very much, that it's building a price plateau between, let's call it 1480 and 1560. And I'd say that's the most recent low area here, the current spike high. I'm not going back to the all-time high or that low that we made in 4 days. We've really traded in the range from the first 5 days of May. We've stayed in that trading range this whole time. Is there anything bullish on this chart? I don't see a thing. So I know you're going to disagree, but let's put on first the 18-day average of closes. Let's now take a look at the swing line. The market made a high, and then the brown line goes down, takes out the previous lows. So the swing line is pointing down, but where the high is, you don't have a pattern of lower highs and lower lows. You've just got a pattern of a higher high and a lower low. So the market was looking for a trading bottom. Moves down. Maybe it found it. We don't know. Resistance is 1528. The risk if one went short there is at least a tick over the most recent high. So you've got about roughly a $21 risk. Let's put more charts, more graphs if we could. You're looking here at this line at the 45-day average of closes. Some traders like the 50-day. I like the 45. And here's the 100-day. We've already seen this. We've seen the market go down, make a lower and low. We've seen that the 45-day at first tried to hold the market. It didn't. And now we're seeing the 18 and the 45 come together. They're converging. Resistance will be in this area that they converge at. Can they go through it? Of course, but that's what you look at on the chart. What else are we seeing? We can see that we spent a couple of days under the Bollinger Band, and one thing you hear me tell you continually, the odds of staying above or below a Bollinger Band are only 2.5% of the time. That doesn't mean you can't ride against it for a certain period of time, but different markets have different personalities. The gold market is not one that I have found that stays above or below it for long periods of time. It can ride it. And that's when you get those moves that just go like that. It can also back off on you. This is a market that's getting a bounce off of the reasons of Greece, the idea that the world's not going to go into a meltdown, maybe inflation's going to come back, QE2 is ending, maybe the government's not going to keep interest rates artificially low as they've been in America. There's a whole group of things. When I add to the chart the momentum index of the slow stochastic, we're oversold. So we're getting a bounce in an oversold market with resistance at 1528. I don't think it's that hard to understand. I pointed out in the silver as we came down just the other day under this number, I said, this is what I look for, and it is what I look for. This is a Bollinger Band that is really narrowed in. And if you think about this, let's take a bottle that you put on the stove. You know, I have one at home. I'm going to bring it in as an example. And you melt it. And what happens, and we use it to put hot spoons and everything on board at an art fair, what it does is it's pressure that's building. And the market broke out to the downside, and this was on Monday. It also got oversold, and I said, folks, I don't know if this is a real downside break or not. I said, but if it starts and can keep falling down, you've got to pay attention because this market might go back for these lows. And I'll stay with what I said. I don't see anything that's really changed. The market yesterday, sideways, and you get a rally today. Okay. But you haven't reversed the trend. The resistance is still up here, and this lip, if you will, is starting to widen out a little bit. And instead of embedding the stochastic, and this is the great news for silver, it's just in an oversold area. So I will say what I've said before. The trend is down. Take out 36.78. I might change my opinion. That's about $3 from where we're at right now. Until then, I see resistance at the 18-day average, but you're so oversold it isn't worth pursuing the market right here. That, to me, is the important part. I've got more charts, but I want to remind you all. I offer a futures trading kit that is totally free. I don't care if you've been trading for years. I don't care if you're doing your first look at it. If you're looking first time at markets, we've got all kinds of brochures in here to tell you about the market, trading manuals. It's everything in one. You don't have to go all over the internet to find these things. Most important, you get to use our charting software. So let's assume you've been trading out there. You're working with a broker and you go, you know, I don't know. I'm not getting what I want. I want to come back to the market. I designed these charts. I made them easy to work with. And what you're seeing is you're looking at them here. Now, the ones that I use, I've got a black background, but you can change it to any color. Got a blue preference? Who cares? You get all the studies. Everything comes in there to work with, and we're trying to show you that we want to be your broker, plus the market research. We really think that kicks in. You get it, and you get a free trial if you haven't tried it before at 1-866-973-2077. All right, let's keep going with the charts because today was the stellar day for copper. And let's go to copper and let me back it up. Copper went up the other day, and this is on Friday of last week, and we had a pattern of a high that was higher than a previous high. The break low is higher than a previous low, and the momentum is flat. You haven't gotten up to the Bollinger top of 418.62, but you're friendly. The market backs off on Monday. To get bearish, you got to take out 405.05, the last break low. Market comes up yesterday, and what did I say? Go to the tape. I said, I think you're pretty neutral here. And I put out webinars, and I did the same thing there. Well, what really happened is if you take out today's high, and this was Tuesday's high, of 412.30, the odds favor you're going to go up, but the risk is back under the low. So you got a 7-cent risk. At $250 a cent, any way you cut it, it's $1,500. I'm still looking for this number to happen, and this is just what I call a hard trade. What do? Go into the Greek debt? I don't know how to go into that boat. But the odds favor the upside unless you now get back under 405.05. Today, the market paid those that bought the market and took that risk and went and got over the Bollinger top. This is the zone that I would be telling people, number one, until that lip turns up, be careful. The odds are you're going to probably trade around that Bollinger top, but the trend is up now until 405.05 is taken out. It's been verified, and this is what I call a bullish market until that number is taken out. With that, I'm Ira Epstein. You have yourself a good day. I'll talk to you tomorrow, all probably a bit earlier in the day. Have a good one.